Boy, is it already that time of day again here, folks? I guess it is. Just about time to do our nightly newsletter here. The 30th of January. Welcome back, everybody. My name is Joseph. Let's take out our notes here today and see what happened today in the markets. Right? Very exciting day. I'll tell you right now, these are the days I love being a trader. Right? I sit here every day. I don't need to predict. We watch the opening print every morning, and that tells us exactly what to do, right? If you watched the newsletter last night, did you use the information we told you guys last night? We made some great money today in the markets. I hope you guys did too. So welcome back. Now, got a lot to talk about here tonight. First, we'll start with what happened today, and then we're going to move over to some charts, and we'll get ready for tomorrow, the last day of the month and the last day of the year, right, if you celebrate your solar new year. First of all, looking over my notes here today, we nailed these levels last night. Now, obviously, we're going to give you guys scenarios. Price goes higher, price goes lower, price stays sideways. It's up to you tomorrow, right? Or this morning, we came in and we used those levels and we waited to see what the opening print looked like. We nailed it. We're going to take a look at it more when we dig into these charts, but very, very good day today. Made some great money. Just again, like I said before, these are the days we love being a trader because it doesn't matter if you know everything. All you have to know is your patterns and where we're going next. What happened today? Markets still reacting to FOMC. Remember, yesterday was the FOMC report. So today we were expecting to see a little bit more settling in as traders were able to digest the FOMC report. Let's see what happened. Looking over news this morning. The main focus this morning, as we said last night, was jobless claims, right? Do you remember what happened in the newsletter last night? We said we had jobless claims this morning at 8:30 and GDP. So it wasn't necessarily jobless claims. It was the Red Star news that came out this morning. So this morning, Red Star news at 8:30, and that lit the fuse and really got everything going. You got to be aware of those Red Star news events. I've got another one tomorrow morning at 8:30. So look for some more opportunities tomorrow morning. Let's see here. Gold. Last night on the newsletter, we talked about if gold opened lower, we'd be selling short. That's exactly what we did this morning. Made some great money on gold this morning. Gold opened lower, which caused us to look short, as we said last night, ended down the day by almost 2 full percentage points, down at 1243. We were talking about gold going to 1300 a few days ago. So how quickly this can change. So gold nailed that last night. Crude oil. Another easy winning day on crude today. Nailed the open last night. What did we say in the newsletter? If we opened above the highs from from Tuesday, we were going to be bullish. That's exactly what happened this morning. Crude opened higher. We're buying on the way higher. Crude finishes the day up a little more than 60 basis points and ends just above 98 even. Now, very important. So crude oil closes the session today at 2:30 above 98, big round number. What's up next? 100, boys and girls, 100. Now, 100 may seem a little bit ridiculous, but we're going to talk about why I think we should be pretty bullish this U.S. economy, including equities and crude oil. We'll talk about that in just a moment. So nailed crude this morning, right? Opening bell higher, buying on the way higher. Very, very good day on crude. But the easy money today was the mighty mini Russell. Now, I know everybody likes trading the S&P, but the easy money is on the Russell, if you ask for my opinion. We love trading the E-minis, right? But the S&P is a little bit too range-bound, a little bit too sloppy. I like these markets when they're a little bit illiquid, like the Dow, like the NASDAQ. My favorite's the Russell, the symbol, the TF. Again, nailed the Russell last night. We talked about on the newsletter, if the Russell opened up, we're buying. If it opens down, we're selling. This morning opens up above the previous high of day. So we got long in the Russell very early this morning. And the Russell ended the day today up 1.13%. So if you took our guidance last night, gold up almost 2%, lower almost 2%, crude over 0.5% up, and Russell, right, the equities up over 1%. So sounds like we gave you guys some pretty good instruction last night on the newsletter, right? Don't forget to pay attention. And don't forget to email me if you have any questions about how we can use this information in our trading. So now we know what the markets did today. Jobless claims this morning. Remember, we had 2 Red Star news events. 8:30 this morning, we had GDP and we had jobless claims. Jobless claims are important, but not as important as GDP. Jobless claims came out a little bit higher than expected, a little bit softening in the jobs market. Obviously, we saw the non-farm payrolls report 1st of January, right, that first Friday of January. That was a little bit soft as well. But then the big news this morning was the GDP. Now, GDP at first glance was not much of a shooting star. It wasn't that big of a deal at first glance. But if you dug into it a little bit, and we talked about this in real time in the trade room this morning, what did they talk about in the GDP report? Well, it came out as expected at 3.2%. Now, 3.2% has no real meaning to most of us. But you know 3.2% is the highest we've seen since 2010? Yeah, it kind of snuck right up on us. So GDP higher than expected, but again, as expected, but the consensus was the highest it's been since 2010. I find that to be very, very bullish. Then, how about the government shutdown? We forgot about that. Right? Remember a month or two ago, right, when the government was shut down, everybody said, all hell's going to break loose, the world is over. Well, yeah, you know it. The world didn't come to an end. We're still here. Well, I guess that depends. If you're in the Midwest or anywhere besides Southern California, it's snowing and raining. The weather in the United States right now is incredible. My heart goes out to you guys who are stuck in traffic or sitting in a snowbank somewhere over the past few days. Definitely stay warm, stay dry out there. This Mother Nature is really, she's got an interesting sense of humor right now, doesn't she? She's making us enjoy the ski season, that's for sure. So government shutdown. Remember that government shutdown? Well, that government shutdown cost us 0.3% of GDP. That's a lot, guys, right? That's a few $100 million that government shutdown cost us. Now, think about if that government shutdown would not have happened. Think about if we hadn't had all this dramatic weather, right? The snow and ice and cold, cold weather. Imagine if we would have been normal. Now think about what that GDP would have been. 3.2, we would have been over 4% GDP quarter to quarter. Whoa, 4%. So now this puts us in rocket ship status. GDP quarter to quarter, a 4% growth. We already knew the Fed knew something that we didn't know because they stuck right with the plan, didn't they? Very interesting how today the GDP comes out very, very strong. So personal consumption, government spending, both tumbled. Very interesting. Government spending was one of the things we were trying to fix here in this country, right? We've always been talking about government spending. I believe they said that had dropped about 20% year over year, so that's good news. Personal consumption was skewed down a little bit. They're blaming a lot on the weather right now, including the pending home sales. At 10 o'clock this morning, we heard from pending home sales. Now remember, new home sales were lagging. Pending home sales, if you read the pending home sales report this morning, what did they do? They blamed it on the weather. But I can imagine that, right? Those pending homes, there's nothing worse than trying to go shop for a home when it's sleeting and snowing and it's not stopping out there. So we're going to give the home market, the housing market, a little bit of slack here. And we'll wait until next month before we make any real big decisions on what that means for us. So today, very active day. GDP, jobless claims, pending home sales. We nailed crude, gold, and Russell. Just had a fantastic day. I hope you did too. What about tomorrow? Tomorrow's finally Friday. Friday morning, we've got personal income at 8:30. That's another Red Star News event. I can smell the profit already, so be ready tomorrow morning at 8:30. We get consumer confidence tomorrow just before 10 o'clock. Remember, we really want to keep that finger on the pulse of the market with consumer confidence. So we'll be hearing from the Confidence Board tomorrow at 10 o'clock, 9:55. Coming up here next week, Janet Yellen, right? My girl, Janet Yellen. She's already been sworn in. She will take over the reins of the biggest bank in the world, the Federal Reserve Bank here in the U.S. Janet Yellen will take over next Monday, February 3rd at 9 a.m. Now, we talked about doves and hawks. Remember that term from yesterday? What's a dove? A dove is somebody who sees lower interest rates, higher inflation, right? A hawk, higher interest rates. Janet Yellen is just like Ben Bernanke. She's a dove. Now, Facebook stocks soar today. Always interesting to follow those social media stocks. Always interesting. Gave the E-mini NASDAQ a nice boost here today. Advertising revenue. What stood out on the Facebook earnings. advertising revenue over 75% year over year. That's pretty impressive, guys, for a big company like that. And again, don't forget, Happy New Year. We got your Solar New Year, your Chinese New Year tomorrow night at midnight. Next week's going to be a little bit lower volume, okay, with pretty much the whole Eastern Hemisphere going to be on a little bit of a break, or at least will be distracted next week because of the Solar New Year. All right, guys? Had a fantastic day today. Lots of news, lots of opportunity, but I think we got some clues going into tomorrow. I talked about here in the title today 3 reasons why I'm bullish. First of all, Janet Yellen. Janet Yellen is another dove. She's about to take over the reins of the Federal Reserve. That's the first reason why I'm bullish. GDP, right? If our politicians get their acts together and keep the government open, we're going to continue to see growth in GDP. That's the second thing. The third reason why I'm very bullish the U.S. economy, and you might not expect this one, crude oil, the black gold. Now, you might remember, go back about a week. Remember when all the equities were getting their butts kicked? Remember when we were seeing horrible losses from profit taking? Remember when gold went higher? What did crude do? It went higher as well. I'm always a big believer that weakness shows up in crude oil futures, and it's usually very, very accurate. All right? When we're confident about the economy, we're consuming crude oil, we're filling up our gas tanks, we're starting new businesses, we're expanding current businesses, right? You know the story, guys. When we're confident, we consume, and crude oil hasn't looked back. We got 100 even on the radar, and we're going to see some technical clues here from the charts. I'm going to show you guys how easy it's going to be to get up there. I talked about it earlier this week. Crude is just a hop, skip, and a jump away from triple digits again, and I'm going to show you guys why I think it's going to get there when we grab some charts. All right? Don't just sit there. Let's get ready for tomorrow. Had a great day today. There's more where that came from tomorrow. All right, guys and gals, thanks for sticking with me. It's Thursday evening. We got one more day left in the week, one more day left in the month, and if you follow the Solar New Year, we got one more day left in the year. Let's jump right in. I'm going to start first here with crude oil futures. And let's take a look at what happened today, and we'll try to project for tomorrow. Now today you can see here, just like we had talked about last night, we opened up above the high. That got us immediately buying this morning. And we were able to buy right away here before it got too slow late in the session. And then it chopped around. We tried to take a couple more trades to get it to go higher, but we didn't get much out of it. So just like we had expected, an opening print this morning that was above the highs from yesterday was a very bullish clue, and we were able to profit from that in our live trade room. Now, 2-day relationship was bullish. Very narrow range still. This is still very narrow for crude, right? We're used to seeing much bigger ranges. And that leads me to believe that something big is on the horizon here for crude traders. The closing print was also right in the middle, which is very interesting. Now, over the past few weeks, we've seen some really unprecedented, volatility. It's been very, very exciting. And what we've come to learn is that although the closing print is a very important thing, it's not as important as tomorrow's opening print. So looking at this right now, I'm very bullish right now for the reasons that I described earlier. However, tomorrow, in order for me to get that confirmation to be buying, right, I can be bullish all I want, but in order for me to put my hard-earned money to work in the market, I need proof. I don't predict, I need proof. So I'm looking to get above 98.59. Get me above 98.59 tomorrow, and I am buying long. And remember how I said it last week, or earlier this week, I should say, how we were just a hop, skip, and a jump away from that big round number in the sky they call 100. There it is right there, guys. We are less than 1 day's trading range away from that 100 big round number. Do not be surprised if we get there tomorrow. Now, what if we go the opposite direction? If we open up below 97.66, we're bearish. And I'm going to be selling this thing down to 96.32. Take some profit there. If we keep going, I'm short down to 95.21. So the most important clue that I see here today is that narrow range. This narrow range is a very, very big leading clue that tomorrow is likely to be a very wide range day. You can see we were able to get and stay above the prior week high. And again, the reasons I described earlier, the GDP, our new chairperson, Janet Yellen, and the fact that we didn't back off these highs this time last week when the rest of the world was coming to an end. Very, very bullish on crude. But I got to be very honest with you. I don't care what happens tomorrow. I'm not married to the long side. If this thing opens up below 97.66, I immediately get bearish. Does that make me a bad trader? Does that make me a flip-flopper? Does that mean I don't know what I'm talking about? Certainly not. That means that I'm going to let the market tell me where I'm going to allocate my risk capital tomorrow morning. And I would encourage you to do the same thing. I can have all the beliefs I want. My opinion is just my own opinion. I think we're going to keep going higher. But it doesn't matter what I think. All that matters is where do we open tomorrow morning at 9 a.m. I'm going to grab that tomorrow morning with the rest of our students in the trade room, and we're going to make some money off it, whether it goes up, down, or sideways. Let's keep going. Now, if you're looking to sell, you don't want to see this chart. All right? If you're a bear out there right now, you don't want to watch this portion of this newsletter. Because when you look at crude, all you're going to see are reasons to expect higher prices. Tough to be bearish when you see an anchor chart like this. First of all, higher highs, higher lows, bullish channel. You can easily see that bullish channel here on my anchor chart. I can also see here, we have some symmetry here up at 98.75, so that's where I'm headed. That's my number one short-term target going into this evening and tomorrow. You know me, if I'm bullish, I want to buy at a discount. So here we are, we push higher on crude. Okay, that would be priced at a premium. I want to bring it back and get in priced at a discount. I'm buying at a discount, selling at a premium, right? I wouldn't want to buy a brand new BMW if it was just doubled in price, right? I wouldn't see any value in that. But I would love to buy a BMW if it was just discounted in price, right? Because then I'm getting a good value for it. Okay, so I know right now crude looks very, very bullish. I've got new higher highs. We're above all the key moving averages. Again, I'm not married to the long side right now. It's not written in stone, but this is looking pretty darn bullish. The ideal scenario here would be to buy 97.46. If it happens to collapse through 97.46, I'm buying 96.81. All right, guys? And then as we go higher, 98.75 is my most important target because it's going to be a symmetrical target. So take your profit off at 98.75 and don't you even think about buying directly into it unless there's substantial buy pressure in the market. As we go higher, you can see I've got some specific levels here, 98.82, 99.78, 124, 101.17. Now, boy, we really could easily get right up to the top of this big, wide, bullish channel. When I zoom out on this chart, you're going to see here that we get a couple different channels here. We get a short-term channel and a long-term channel. Now, look what happens if we end up going up to the high there, right? That's going to put us right about that 100 even, and there's that big round number again. So as you can see, I'm very bullish on crude, not because of the economy, not because of the fundamentals, but because of the technicals. The technicals are what prove to me that the fundamentals are even worth our time. So bullish on crude. Now we go from the black gold to the gold. Let's grab a look at gold futures. Now remember how we said yesterday expecting the rollover to happen on Friday? Well, you know, one of the things we love about being a trader, you never know what to expect. This morning we came in and gold had already rolled forward to the 414 contract. So if you're a gold trader right now, make sure you're aware of this. We are trading the 414 contract. There is more volume on the April contract than there is on the February contract. Now, we do a lot of work with training our students on how to do rollover, how to use charts, how to use volume. So don't be afraid to come in tomorrow morning to the trade room and ask me for help about contract rollover. Now, taking a look here at gold. Now, does anybody remember what we said last night? I want you to think back. If you can't remember, go back and watch last night's newsletter. We mentioned that if we open below the low from the previous night, we'd be selling short. Now, do you recall what level I said was likely to be hit? Yeah, the prior week low. Remember why? Because if you zoom out here, there was a big gap down here, right? Remember that big gap I talked about? Remember that gap that we said had not been filled yet? There was that gap, right there. There was a big gap in price. So we talked about this last night. And sure enough, like I said in the introduction today, if you followed our guidance, you had yourself on the right side of the market, right? That's the first step, getting yourself on the right side of the market. Then the next step is just mastering the entry techniques, which I'll teach you in our trade room every day, Monday through Friday. So if you followed our advice, we open well below those lows. So that means we're selling off. We almost made it down to that prior week low, right? I'm not joking around, guys. I'm not making this stuff up. This is very accurate directional bias based on the morning or the opening print. So what do we got here? 2-day bearish, range typical, closing print in the middle. Now, again, we've got some very, very dramatic volatility in this gold market right now, so I'm not even going to speculate as far as what that closing print means. Get a pretty typical range, nothing really there. And again, the 2-day bearish, that's going to be the big one. The fact that we gap down here, right, is a huge clue. I'm already seeing clues. We got GDP that without the government shutdown would have been at 4%. That would have been a huge move higher. We've got Janet Yellen, another dove coming in as our Fed chairperson. Okay, she's going to keep interest rates low. Okay, that's going to push gold higher. So we have some conflicting things here, right? Confident in the economy will push gold lower. A new Fed chairperson, she's going to push gold higher. Emerging markets right now are a little bit slippery right now. They're still dealing with that emergency increase in interest rates from South Africa, India, and Turkey that we saw 48 hours ago. So gold's going to continue to be a roller coaster ride. Don't try to predict this market right now, guys. It's going to be almost impossible. Rather than predicting, I'm going to react. If we open up above 51.6, I'm getting long. And I would expect we're going to go right to that previous high of day and probably right back to the prior week high. There, I said it again. We'll see what it looks like tomorrow. Again, if we open up below now, 37.5. We open up below 37.5. I'm going to go ahead and I'm going to readjust this. And I'm going to say if we open up below 33.5. Okay, so scratch that 37.5 because we got that prior week low down here. So what's likely to happen is if we open up below it, we're likely to get stalled out a little bit here, and it may end up coming right back up into that range. So what I'm going to say now is below the 33.5, we're bearish, and we're going to sell off here. We've been just recently at some pretty significant highs, so we should see a pretty good drop. I got 22.8 and 18.3 on my radar below me as easy profit targets, and then there's that big round number at 1,200. We were just talking about possibly seeing 1,300. So again, get below the prior week low. There's that big round number down there at 1,200. That's where those sellers are shooting for, right? That's a pretty big range to fill tomorrow. But definitely look for that short below the 33.5. Take your profit off at the levels that we've marked up below. All righty? Looking good here. There's your gold. Let's grab a look at the gold anchor. And the gold anchor really makes it difficult on us. The gold anchor is not pretty right now. Now, what I want you guys to see here is this big drop down. I'm going to zoom out a little bit here on the anchor chart. And I want you guys to see here this huge drop down. And now we're going back higher again. So here's the reality. I have a long-term bearish trend, but I don't know, guys. I've got higher lows. I've got lower highs. We are consolidating into tomorrow, Friday morning. What that means is this can go any direction. So just like we saw on the VIP chart, we really don't have a lot of confidence right now on long-term direction. So what I'm going to do is, if I see a new lower low, I get a big level of support here at 38.8. Okay, huge level of support at 38.8. It's a monster symmetrical support level. So I got to be very careful until I get below, I'm going to say 37.5. Get me below 37.5, and now I've got some important levels below me here. All right, and that's where I'm going to be looking for a short. So if I get below 37.5, right, that's the low of day today, I'm going to be looking for a short down to 30.6. If I can get below 30.6, I'll look to do it again down to 19. And if we keep on going, I've got 1207, 1202.5, and 1192.6. So all of these levels, very, very important if we end up going lower tomorrow morning. All right, I get a funny feeling we're going to see this price push lower. Okay, so make sure you get below that 37.5, and then I'm going to use these levels as targets. 30.2, 12.19, 12.07, 12.02.5, and 11.92.6. Those are my targets. Again, look closely. There's your next big round number down at 1,200. That's going to be a big price magnet for you guys who are sellers on gold. Now, if we happen to go higher here on gold, get a little bit of a different scenario here now. If we go higher, we get a bunch of resistance. So what I'm going to be looking for is, I'm looking for price to go higher, but I'm still going to be looking here to sell because we're still going to be in this long-term downtrend. So I will look to sell at 54, 58, and 66, 63.5. All right, now, we will get some short-term buying opportunities on the way up, but it's going to be really, really ragged. You've got some moving averages that are going to spoil the party. And then there's just a little bit of room here. You might be able to grab along between those two areas, but you're really playing with fire. I would rather sell at these resistance levels overhead and continue with this long-term trend. If we get above the 66.8, then all hell's going to break loose, and we're going to be going higher here. All right, so at that point, above that 66.8, that's when I can start being aggressive at the buy side. But right now, though, I'm focused on the sell side here on gold. Again, I'm going to have to wait for tomorrow morning and see what that morning print looks like at the opening bell tomorrow. And, of course, last but not least, our big rock star market this week, the Mr. Mini Russell. Mini Russell, symbol TF. Taking a look at this on this chart, boy, these VIP charts would make it look like there wasn't much of a move here today, but boy, there was ever. Now, remember what happened last night? We talked about if we can open above the highs, we're bullish. Well, we didn't exactly get the open above the highs. We got it right at the highs. And this is something that we always talk about in our trade room. If we open at the highs and immediately move outside the range, it's just the same as if it opened above. The big concern that I have is when it opens inside right in the middle, right? If it opens right inside the middle, that's when I'm a little bit concerned. But you can see here, though, we opened at the highs and quickly moved above. Once we saw that closing, that 5-minute candle close above the previous high of day, we were bullish. I was bullish the whole morning on Russell after seeing it open near the highs. I wanted to get up to that prior week, right, that prior week low, and you can see here, got just above the prior week low and then collapsed back down in. Now, remember, I'm not going to predict, I'm going to react. So tomorrow, we're going to come in here, if we're above the 44.5, we're bullish up to 63.3. If we open tomorrow below 26.3, we're bearish down to 15.8, 1105.3. There's the big round number of 1100. Right? And that's going to be on our radar tomorrow morning, that big round number. Okay? 2-day relationship, very bullish, narrow range, and of course, closing print near the lows. Again, I'm not going to try to predict right now. End of the month, end of the solar year. We got a lot of stuff happening right now in these equity markets. I'm very bullish right now based on what I've seen on the news reports and based on what I've seen in price action. But again, in the short term, tomorrow morning, we're going to come in and see where is the opening print. Is it above or is it below? Because that's going to give us a big, big heads up. Then last but not least, you've got your Russell anchor chart. Now, you thought gold was ugly. Look at this one here. We got a little bit of trouble here on this one. You can see on the anchor chart, we're pretty much going sideways. I got long-term bearish, short-term bullish. I've got resistance levels overhead. I've got support levels below. We're trapped. Right now, we are pretty much trapped here on the Russell. So tomorrow, if we see an opening print in the middle of today's range, you know what we're doing now, right? Buying at support, selling at resistance, two-sided trading. So the best possible scenario tomorrow, okay, the best possible scenario would be to get price either above the 42.1 or below the 18.9. If I can get below this area, I can then start to look for shorts, right? Because we'll be back to the sell side. If I can get above the 42s, then I can start looking for longs. Now, the only thing you got to be careful about tomorrow, because we've got all these levels overhead, I'm going to use those as profit targets. Again, get me above 42.1. I'm going to use these as profit targets. And then remember, we just don't want to buy directly into that resistance. Okay, so I'm going to buy as long as it's not directly smack dab into that resistance. And the same thing is true to the downside. Get me below 18.9. Now those sellers can get back in control again. And I'm going to use the 11 and the 022 as well as the big round number of 1100, right, as our profit targets. So it's looking to be a little bit sloppy tomorrow morning on the Russell. But again, like I said before, we have no idea what tomorrow's trading day is going to bring, right? It's a great thing to be a trader. Every day we get a chance, just like Christmas, right? Just like Hanukkah. We get a chance to come every morning, and we get a nice big surprise every morning that we get to work with. I am very excited to see you guys tomorrow morning in our live trade room. We are making some great trades this year of 2014. I hope you've seen value in our presentation. I hope that you come back and join me next week as well for our next newsletter, or join me as a student at the School of Trade. From our corporate office here in Los Angeles, thank you so much for joining me here this evening. Don't forget to share this newsletter with a friend and send me some feedback. That way I can always improve for you guys. I'm bullish on crude, sideways on gold, bullish on Russell, but again, we're going to have to wait and see what tomorrow brings. Remember to learn it so you can earn it. We'll catch you guys tomorrow. Adios, amigos. Bye-bye for now.